Good evening. A very warm welcome to this edition of India Tonight. I'm Vikram. The focus on the show and why we're starting late is because our focus has been resolutely on the kind of push Indo-US ties are getting with the state visit of Prime Minister Modi. Just a while ago, you heard the Prime Minister make that speech alongside the US President Biden, and this from the White House. Already, there has been a tech transfer, an agreement between GE and Hindustan Aeronautics, a rather strategic one in the defense universe because it's going to power up Indian skies. The engines that our light combat aircraft require, those engines are going to be made in India through this deal. Also, a significant question to ask is if the US is propelled by strains with China to make India a stronger ally. And much of that seems to be on display in this visit. Outside of all the attention in the US and the Prime Minister's visit there, we are bringing up concerns over the exit of Byju's auditors. Also, Bitcoin's rise beyond $30,000 and how Wall Street is faring as we watch some of the Q3 numbers play out in some of the counters on Wall Street like those of Accenture. But first, about Byju's. Well, there is more trouble in sight for Byju's. The edtech major statutory auditors, Deloitte Haskins and Sells, have resigned because of the delay in the company's filing of their financial results. Byju's has now hired BDO, MSKA Associates as their auditors. Let's find out about these developments. My colleague Anurag Joshi has been tracking them. He's joining us from our Mumbai studios. Anurag, this has been one trouble point after another as far as Byju's is concerned, and the latest one is where we have an exit of their auditors and, of course, an appointment of new auditors. Tell us about the situation as it stands for Byju's.
Yeah, that's correct. So Deloitte Haskins and Sells has resigned as the statutory auditor of Byju's. Now, this is a very interesting development in the Byju's saga because Deloitte Haskins and Sells was supposed to be the auditor that was going to audit the financial statements of Byju's for the financial year ended March 31, 2022. Now those financial statements are yet to be released. Now the Deloitte Haskins Sells has been replaced by BDO, and they will be auditing the FY22 statements. Now, in its resignation letter, Deloitte Haskins and Sells has mentioned that the financial statements for FY22 are long delayed, and that those statements were supposed to come out by September 30, 2022. Now, it's again interesting because last September, Byju's had released the FY21 results with a net loss of over about 4,600 crore rupees.
Yes, indeed. These are troubling times for Byju's. Let's get further perspective on this. K Ganesh is a serial entrepreneur and the promoter for Big Basket, Bluestone, Home Lane. This is indeed troubling times, Mr. Ganesh. Byju's troubles seem to be mounting. Their auditor, like my colleague was saying, Deloitte, they've decided to walk out because of these long delays in filing results. But, even before that, it's been a tough ride for Byju's. It has been a rough 2022. There were valuation cuts by prominent investors. There were searches by the Enforcement Directorate. We've seen that legal battle that Byju's has currently had with lenders over their repayment terms. Besides, there were layoffs and funding that just doesn't seem to be coming through. What, according to you, ails Byju's?
Yeah, so it indeed has been one troubling news after the other for Byju's for many quarters now. It's really unfortunate because it is the highest valued Indian startup, edtech startup, even globally valued edtech startup. So it's something of concern to all of us in the Indian startup ecosystem. But before trying to beat somebody who is down or beat up on a company that is facing troubles, I think we should distinguish between what are the real troubles and what are just the perils of doing business or being in business. So I want to differentiate the two. For example, to be generous or to take the easier part, valuation of markdown valuation by investors in their book is required as a mark-to-market requirement. It's an accounting entry. Nobody has raised, Byju's has not raised money at a lower valuation. So something like marked down by some of the investors in the cap table of the valuation is purely accounting book exercise. Obviously it's not nice, but that's the state of the market. Public listed stock have all fallen down. So those are the easy thing to handle. Similarly, layoffs, every company is laying off because the growth has not happened. They have also laid off. So that's also okay. But definitely concerning issues are the fact that you are taking your lender to court, you're not made payment. That is really troubling and troublesome. Similarly, if you take the ED rates, it's okay. ED has got a enforcement directorate, does have a responsibility to investigate and do that. Whether something happens or does not happen, I wouldn't attach too much of significance. But everything is negative. On this auditor resigning point per se, the fact that Deloitte was not signing off, there was a differences of opinion on revenue recognition, on the way revenue should be recognized, was quite well known. So per se, the resignation now and a new auditor appointment now, that development I'm not very concerned about. The fact that they have not been able to converge, they have not been able to file the audited returns by the due date, and there still is a lingering difference of opinion on accounting entries is really troublesome. And as the lenders who have filed a case have said, one of the covenants is timely filing of audited financial results.
Exactly. So not being able, Mr. Ganesh, not being able to find financial results, that does say something about corporate governance. The troubles over at Byju's we have been watching, but how do you see them tiding over them right now, and this particular concern over not being able to file financial results?
See, again, I'm not a chartered accountant. I'm not privy to the inner workings of it. This delay seems to be really extraordinary because they had done multiple acquisitions, and consolidating multiple acquisitions and filing the result is something that may take time. But this is a well-known thing that you have done acquisitions. So putting more people on the job, accelerating it, working overtime, such delays are clearly is worrisome. Okay, right. Some amount of delay is understandable.
Right.
But despite all acquisition, it is really troublesome. It seems to be more than just a revenue recognition issue. Again, on revenue recognition, it's quite understandable that auditors want to be conservative. They want to recognize in a way which is most conservative. And it's understandable that the founder and the entrepreneur wants it to be as aggressive as your accounting standards will allow it. And again, accounting standard, whether it's India-U.S. or IFRS or US GAAP or Indian GAAP, each one will recognize it differently. So those are again par for the course. But such delay is not understandable. I don't know the exact reason.
Well, and that's really the point. Is this peculiar to Byju's as a startup, or is this emblematic of what kind of troubles edtech is facing right now? What's your rating? Overall, what are the challenges that you see in the edtech universe in India right now in that startup space?
So, that's a good question. See, during the pandemic, edtech soared very, very high. People had no choice but to learn online. So all companies expanded. They went for market share. They created capacity. They raised money. A lot of money they raised, burnt a lot of money, went aggressively for market share at very high valuation. Now, all of us are responsible. The investors are responsible. The board is responsible for doing all those steps because they thought it's going to keep on going. They all expected that when COVID ends, some normalcy will return and online education will come down, but nobody expected that it will come down back to this level. It almost looks like in travel, it has happened, revenge travel or revenge tourism. People have with a vengeance gone back to physical, one-on-one, face-to-face kind of tuition from online tuition. So that kind of a drop was unexpected. Overcapacity had been taken. Huge valuations, huge money has been taken. So all of that is coming back to haunt the edtech and many industries that benefited from COVID or pandemic tailwinds. So that is what is happening. Two, it is not emblematic of startup per se. Now, see, the challenge is that, and we are all guilty of it, so I'm also guilty of it. When you're a startup, you can say I'm a startup and let go of some of the systems and processes and procedures and governance. But when you become a large startup, when you are a unicorn, when you employ thousands of people, when you raise hundreds of millions of dollars, when you have valued at billions of dollars, then you cannot hide under a startup nomenclature and say, I cannot have systems and processes. Right from having independent directors on the board to having this is something that all of us need to do. So I think the challenge, I'm not referring only to Byjus. I'm referring to all companies in the startup ecosystem. We need to hold ourselves to higher standard moment certain minimal threshold is released.
Once
it may be number of employees, amount of funding, number of customers, any of these minimum thresholds. After that, in case you go down, in case there is a problem with governance, in case there is a challenge, the collateral impact is phenomenal.
It is, and that's exactly what we are seeing. Accountability needs to be high. As far as startups are concerned, like you said, you cannot hide behind anything. To be able to be accountable to the key stakeholders once you become the size that you're referring to, once you're a unicorn, and that's certainly the case as far as Byjus is concerned, even as their problems mount and you have the exit of their auditors, the entry of new ones. We'll see exactly how it goes for them. Mr. Ganesh, thank you very much for lending your perspective on the startup universe, on tech, and certainly on Byjus. Then there are the Indian markets to speak about. Today, the Nifty has given up early gains and closed in the red after nearing record high levels for 2 sessions in a row. The Sensex as well has lost more than 200 points. The PSU Banking Index has been the top sectoral loser. Punjab National Bank and Bank of Baroda were the top laggards in trade today. Then you had the energy stocks and you had IT stocks as well, which went down in red territory. The Bank Nifty down more than 1% at the end of trade. But yes, our focus has also been on the minutes of the Monetary Policy Committee's June meeting. Those minutes of the meeting are out. For the second time in a row, the MPC, headed by the RBI Governor, Shaktikanta Das, decided to keep the short-term lending rate, the repo, unchanged after continuously raising it since the month of May back in 2022. So what exactly are the minutes of the meeting, the last one that they had, where they decided to take a pause on interest rate hikes? What exactly are they indicating? Earlier today, my colleague Ankur Mishra has filed this report from here in Mumbai.
Yes, Reserve Bank of India Governor Shaktikanta Das has made a strong statement against inflation in the MPC Minutes, which has been released. He has said that our job is only half done, having brought inflation within the target band. In fact, he has also said that we need to undertake a forward-looking assessment for the evolving growth and inflation outlook. All in all, you would remember that MPC had gone for a pause this time, and they had mentioned even in the Monetary Policy Committee meeting press meet, the governor has said that inflation is still a concern till the time it does not go towards the target band, that means the 4% target. Apart from that, the other Monetary Policy Committee members like J.R. Verma has once again opposed regarding the stance which has been taken by the MPC members. He has said that this stance is becoming more and more disconnected from the reality, and monetary policy is now dangerously close to the levels which it can inflict significant damage to the economy. There are other members who have spoken about the growth as well as inflation dynamics, and Shashank Bhide has said that overall growth momentum for this year looks a little moderate than compared to last year. Similarly, Ashima Goyal has said that the real repo rate does not rise. That needs to be taken care, and she said that it does not require the nominal repo to be kept higher for longer. That should be something which MPC should carry out. RBI Deputy Governor MD Patra has said that near-term outlook for inflation is relatively benign compared to last year's experience, and monetary policy needs to be remaining in the brace mode. The other MPC member Rajiv Ranjan has said that our cumulative actions needs to be taken working in the right direction, and hence he has voted pause for this policy committee meeting.
So that's what we got as far as the Monetary Policy Committee meeting. The minutes of the meeting are out, and we got further clarity on how the RBI is thinking. But meanwhile, there is focus on some of those quarterly results, Accenture being one of them. The stock of Accenture has taken a downward trend, and this after their Q3 results are out for the year 2023. Their guidance has been cut. It was 8 to 10%. Now that guidance is 8 to 9%. Let's find out more. My colleague Anisha is joining us on the phone line to tell us more about Accenture's third quarter. It's been a muted one, hasn't it, Anisha? Do tell us about Accenture, because that stock is taking a beating on the back of the numbers they've reported.
Hi. So yes, it's a bit of a muted set coming in from Accenture, but definitely not ugly, because if you look at the Q3 performance, the revenue is largely in line with expectation at $16.6 billion. Yes, the margins look optically lower at 14.2%, but if you adjust for the one-off, the margins also stand at 16.3%, which is 20 basis points higher than the last year. There's a couple of comments which are also positive. The very strong double-digit growth continues when it comes to the cloud vertical. However, having said that, BFSI vertical has managed to grow by just 5%, and North America, that's up only 2%. That, for me, is a bit of a worrying factor. Separately, I think the reason why the stock in the pre-market is showing a bit of a downtick is the fact that new bookings have come down. So last quarter, we had seen new bookings to the tune of $22 billion. That's sharply fallen to $17 billion. Yes, the company had pointed that in this quarter, the bookings will be lower, but it's substantially lower than what the street was working with. And then, of course, the final, nail to the coffin is the fact that there was a downgrade coming in when it comes to the guidance of full year. As you rightly attributed, it was 8 to 10% earlier for the full year. That now stands at 8 to 9%. This time, the street wasn't expecting any cut with respect to guidance, so that's why a bit of a surprise or a shocker coming in there. But again, I wouldn't call it an ugly set given the headwinds that the entire sector is facing. It's par for the course. Consulting was a bit of a worrying factor, which was down almost 4% on a year-on-year basis, but made up by outsourcing. So overall, a muted set coming in, but not a very large negative at this point of time for the IT sector.
Yes, indeed. Not so bad, but the stock is still taking a beating, Anisha. In fact, I was looking at how Wall Street is performing right now. And yes, there are cuts. The Dow Jones is down about 0.25%. As you can see on your screens, it's currently trading around 38,860 levels. So a big cut. But yes, Accenture now, as far as that stock is concerned, remains in focus. But altogether, if you see the NASDAQ, that's still doing all right for itself. 1/10 of a percentage point up move as far as the NASDAQ is concerned. But right now, we'll have to see how the markets do. The S&P 500 is also down by around 0.1%. Tesla stock is another one that has come under pressure because now Morgan Stanley has downgraded that stock to overweight, and on the back of which we've seen the stock slump as much as 2.4%. Recouping some of those losses, we'll have to see how much at the end of trade. And yes, the Accenture stock is down around 9% in trade. So mixed trade. We'll keep our focus on Wall Street for the moment. A quick break, after which we turn our focus to what's happening by way of bilateral trade between US and India. The aversion to China by the United States, is that an opportunity that India is going to be able to nurture and grow? As far as Indo-US ties are concerned, the Prime Minister on that state visit, there is a lot of talk about the possibilities. Some of it has actually come through, especially in the defense universe. We'll put the spotlight on that and more. To stay with us on India Tonight. Prime Minister Narendra Modi is in the United States, and just a while ago he was making a speech alongside US President Joe Biden as well, and that's where the action is. The potential is huge. The burgeoning India-US trade relationship, now that holds immense promise as of now, because we are looking at a landscape which is China +1. Within that, there are several opportunities for India to grow and nurture its trade relations with the United States, and that's exactly what our focus is. Let's get perspective on where the potential lies and whether India or not can actually dig into that potential even more. And to discuss it, Rajat Nag, the National Council for Applied Economic Research, is joining us, along with Mr. Ajay Dua as well. It's great to have you gentlemen with us this evening. Mr. Dua, of course, is the former Union Secretary in the Ministry of Commerce and Industry. Great to have you, gentlemen. And looking at the kind of action that we are seeing in the United States and the focus on the Prime Minister's state visit, a lot is being spoken about by way of the possibilities in bilateral trade. Already, there is a deal between General Electric of the US and Hindustan Aeronautics. There is the possibility of a lot more happening that would further the cause for Atmanirbharta as far as defense manufacturing in India goes. That has been key. And very crucial, Mr. Dua, is the fact that this kind of ties between India and the US is something that the US generally reserves for its very close allies, for NATO allies. But here, there is a very strategic tech transfer. What exactly does that tell you, Mr. Dua?
I think it tells us a lot. One, I'll start by saying the time has come for India. It conveys that very clearly. Be it because we've done well economically or we did well in handling COVID compared to the rest of the world. So whatever it might be, that our stature in the global arena, this is getting reinforced by the kind of reception and the agreements which we expect to come out of this visit, number one. Number two, I think the US is shedding its inhibitions about transfer of defense technology to India, which is a very great thing. Because as of now, only about 20 odd countries can supply components or finished products, intermediates, so to say, to the US defense industry. And we know US defense industry is the largest in the world. So with the kind of agreements and understandings which are being reached, and India is pressing of the fact that it is allowed to join that galaxy of 22 nations which contribute to the US defense might, I think the US is relenting, and I'm using the word very carefully, but gradually so far. And whether in this visit, by giving India a status of NATO +5, as you know, already is there in which New Zealand, Australia, Japan, Korea are part of it. Whether we also get that, if we get that, technology transfer between India and the US would become very much, would get facilitated, then we are very much into it. But I'm not sure if we would be going that far during this visit, because the idea, though, I believe was kind of India was sounded when Mr. Austin, the Defense Secretary, had last visited India. So we are right now, we are seeing, as you mentioned,
Yes,
the GEF 141 technology making co-production of jet engines in India which have military capability.
that's true.
Never happened earlier.
Yes, and for
With
light
our
combat
great-
aircraft that India manufactures, this is going to be an important curve. Earlier this evening, I was speaking to another expert who was telling me how it is going to be a longer learning curve, but the process needs to start as far as being able to make our own engines over here, and this kind of technology transfer is going to facilitate it. But I want to ask Mr. Nag, do you agree with Mr. Dua when he says that the US is relenting? How palpable is the focus on geopolitical dynamics coming through? The strain between the US and China, how much is that driving bigger investment and stronger trade ties between India and the US now that we know of these tech transfers that have been earlier reserved for American allies? How do you see it?
Right. Well, thanks, Vijay. And of course, I appreciate very much the points that Ajay has made. I would just add slightly to that nuance. I think if relenting, both sides are, and I think that's good. US, as we all know, had a penchant for alliances for the longest time, and India had a penchant for strategic autonomy, whatever that meant. What I think is happening now is there's a convergence of the realization that each side needs each other. And it's a transactional relationship, and it doesn't have to be all or nothing. It's certainly not an alliance. And it's certainly not of the type of either you're with me or without me. So to that extent, I think USA has made adjustments, as Ajay just mentioned, in terms of technology transfer, and I'll come to that in a moment. But on the trade and investment, which is obviously a major focus of this trip, technology being a part of it, US is now India's largest trading partner. For the last 4 or 5 years, 4 out of 5, it has been so. And India's trade with the US is now about $128 billion, with a slight trade surplus in India's favor, which is a very happy, unusual situation. But China's trade with the US is about 4.5 times more. And the trade deficit for China, or for the US vis-a-vis China, is about 380. So there are orders of magnitude difference. And this is where I think the point that you made, Vijay, comes in, which is, Vikram, sorry, which is that India-US relationship is obviously influenced very much by the US-China relationship, or lack of it. And India is a very strategically important country, but not as sort of, either or, as I said. India very strongly believes in a multipolar world, of which India is going to be a pole. And it reflects in a growing stature of India.
Yes.
And I would just add one slight point, if I may.
Yes.
Which is, I think the potential is huge, as you rightly said at the beginning. But it is only potential because, we have some major constraints that we have to recognize.
Yes.
Skills being one of them, infrastructure being another. On infrastructure, we are making progress. On skills, we are not. So my biggest concern about India stepping up to the plate really is whether we'll have the skilled people that we will need.
Fair enough.
Let me stop there.
So that's an important point that you make. Right now, we're talking about bilateral trade between the two countries. As far as India is concerned, to make the US its largest trading partner, that is going to take a lot of effort. It is going to see a lot more of these ties on various fronts getting that much more cemented through the kind of visits and through this kind of bilateral involvement. But as far as sticky points go, we're not seeing a free trade agreement yet, Mr. Dua. What holds us back between India and US? There are concerns. There are on a visa issue, for example. That's one. There are strictures on Indian aluminium and steel that came about in the Trump regime. Walk us through the pain points as you perceive them and how you think they could be negotiated.
Vikram, I don't think either side has tried it hard enough to enter into a trade agreement. I think we've been concentrating on the individual nations on a bilateral basis, but which are much smaller in size. As of now, we are talking to, individually, we're talking to the UK and we are talking to Canada, which are, reasonably in terms of their trade volumes, etc., size of the economies. But with the US, we have talked, initiated it, but not pursued it. And as you referred to, what happened during the Trump regime, that did put back a lot of things between India and the US. One, on the levy of duties on steel and other metals, aluminium in particular. Second, the US took away from us the status which was GSP, which had been granted for a long time to LDCs, and India was considered one. US said, you have crossed $2,000 the per capita mark, you are no longer an LDC, so you're not going to get any more preference from us. Third, the US and India got involved with a whole lot of subsidy issues, and the US, we had to appeal to the WTO to come to our relief, and the US valiantly, I would say, opposed us there. So I think some of these things have come in the way of India-US trade building up and being formalized by way of a CEPA or a trade FTA, a trade agreement. Hopefully, some of these things are now going to get settled. I understand one of the issues discussed between the Commerce Secretary of the US and our minister was that how many of those issues pending before the WTO. I think there are 7 matters, bilateral matters, which we have appealed or gone to the WTO, whether how many can be settled outside.
Correct. Right.
Having said that, I think that trade would increase now that we are talking of investment,
Yes.
certain decisions. For instance, we've agreed to buy from the US drones.
Correct.
These could be costing well anywhere between $3 to $5 billion.
Yes.
We've agreed to have Micron come and set up a testing and a packaging unit in India, something like, what the Apple, when it moved from China plus strategy,
Yes.
it chose India. In the case of Micron, it's a little worse. They've been asked to leave China. So I think they had to choose some country.
Correct.
And they've come to us. I do expect trade to build up now in green hydrogen, carbon capture, all the greening activities,
Yes.
and battery and energy, particularly for storage.
Exactly.
In all 3 of them, we need technology as well as we need
We are
investment.
talking about semiconductor, and that is an important space in terms of energy. Renewables is something that the 2 countries can work on together. Where are the majority of the possibilities, according to you, Mr. Nag?
Just before that, Vikram, if I may, just to add a point to what Ajay said, I think in the near future, and hopefully I'm wrong, but I don't think there's a possibility of a FTA. What I think the countries are doing is just trying to secure greater access to markets and ease of doing business, which I think is a realistic way to do it.
And that's what the Indian government has said as well.
Asked me, our biggest strength, I think our biggest strength really is our technological knowledge base in the software. That is what we have to capitalize. However, we also need the manufacturing really for the employment creation, and that is always the dilemma. I think we as a country will be better off capitalizing on our services and on the know-how of the people, the software developments, etc. And that is where I think we can have a significant comparative advantage vis-a-vis some of the other countries, because mind you, the supply chain that we always talk about is quite frankly not moving from China to India. It is really moving from China to Vietnam to Thailand to Indonesia. But that is if we compete strictly on the manufacturing basis. But if it comes to technical know-how, I think India has a very superb possibility of capitalizing it much better.
Important to build that manufacturing ability, because that's where we seem to have been held back a little bit. And at this point in time, even when we're talking to Tesla, which has taken some time to come, there has been the possibility, but we haven't been able to get them over here to set up a manufacturing base. We seem to be that much closer after that meeting between Elon Musk and the Prime Minister. But that manufacturing base that we need to create over here, that kind of business going away to the likes of Vietnam, isn't that something that we can correct in bilateral trade with the US? Mr. Nag.
Was that for me?
Yes, Mr. Nag, please go ahead.
Yeah. Yes, I think so. I think this is what I was referring to earlier, those constraints. It's one thing to approve a $2.5 billion investments by Micron, but to establish a semiconductor facility of that type, or Apple, and I'm sure it's going to happen, you need a very sophisticated manufacturing base. You need a very uninterrupted power supply. You need logistics of transportation. You need to make sure that you've got the people at the right place at the right time. And I think we have a long, if not long, certainly a distance to go. And that is where I think we will have to focus on. Otherwise, the potential, I'm afraid, will remain a bit unrealized, or certainly underrealized.
Pacific Economic Forum as well. It's an economic initiative launched by the Biden administration. And there are a total of 14 participating founding member nations, and that includes India, present as a massive opportunity now. There is the possibility to grow from agreements like this. Do you think India is well placed and is for being part of such initiatives that the US would launch? Mr. Dua?
I think you're referring to what's called India Partnership, that IPEF. The IPEF, in which we have 4 kind of pillars, particularly it came out of Quad.
Yes.
We have so far agreed only to 1 and not to the other 3, and the one which we have agreed to is developing alternate supply chains. In that one, I do expect that India would look at seriously the other benefits as well, because in economic, we are no longer a member. We are not a member of RCEP, the Regional Cooperation for East Asia, or these countries here. We are not a member of the Transatlantic Agreement, which, in any case, Mr. Trump had bought that. So I like to see that without worrying too much. See, our phobia has been China, that if we enter into any of these regional agreements of which China is a part, then China will dump the Indian markets. I think now that there is a inbuilt, or I shouldn't say the word inbuilt, but a lot has happened since we turned down joining the RCEP. Everybody is wary of China. I think we should move along and join the other pillars also of IPEF. The economic partnerships will result in subsequent more strategic relationships, be it in defense or be it in technology area. And to start with, our getting into, so even though it's going to be, we're going to be paying up 11,000 crores or $1.4 billion as 50% of the investment in Micron. That's our PLI scheme. And because Micron is the prime mover, first company to come here, so I think that's the price if you want the semiconductor industry to start taking roots in India. And we have announced it, that we are willing to give to others also 50% of the grant. So, and others, and we've extended the PLI scheme's deadline to 31st December 2024. But what interests me is that today we seem to have also talked about an agreement on India and USA jointly getting into the space sector. And for that, there is something called the Artemis Accords. We seem to have endorsed that today, which would mean, and as early as 2024, you might see an Indian astronaut going on a NASA spacecraft, going there. And we're not doing too badly in space, as you know. We've been launching our satellites commercially, otherwise also, and that's an area, an example which Mr. Nag was talking about, services and technology. Our space sector is a very good example of that we can be exporting, we can be kind of joining in on services sector,
yes,
high tech, including high technology.
Artificial intelligence is growing in a big way, and that's something else that is going to be an area where the two countries could be seen working together, cybersecurity, the creation of a digital infrastructure, and that's something else that is going to be as part of those bilateral talks. How much more comes out of it is going to be watched very closely. We've already seen deals as far as the defense sector is concerned. Talk about those drones, you talk about the entire ability for India to manufacture some of the engines that are required for light combat aircraft is concerned, and there would be plenty more that the two countries will pursue. There is clear evidence of the fact that there are stronger ties, and we will continue to monitor all that comes out of the Indian Prime Minister's state visit to the United States. Mr. Dua, Mr. Nag, thank you very much for joining us with your perspective on all that's happening right now between India and the US, and we hope to have you back on the show with more perspective in the future. Thanks very much for joining us tonight. Meanwhile, my colleague Sumita has been tracking all developments from the ground where all the action is. Here's her special report about the Prime Minister's visit to the United States.
A ceremonial guard of honor, a hug, and a warm welcome later by the Bidens more than made up for incessant rains that lashed Washington, D.C., while the Prime Minister embarked on the second leg of the closely watched state visit to the United States. Prime Minister Modi received a handmade antique American book. US President Joe Biden gifted Prime Minister Modi a vintage American camera, an American wildlife photography book galley, and a signed copy of the collected poems of Robert Frost. Incorporating elements of Indian spirituality, Prime Minister Modi gifted the United States President Joe Biden a copy of the 10 Principal Upanishads, a sandalwood box, and a 7.5 carat green or an eco-friendly diamond for the US First Lady Jill Biden. Beyond gifting, diplomacy will now be extended to the soft power of food as well. While lotus blooms and peacock-themed tablescapes define the decor, America's First Lady has made sure of a plant-based vegetarian menu for the guest of honor.
Guests will walk across the south lawn into a pavilion draped in rich greens with saffron-colored flowers at every table, the colors of the Indian flag.
So what will the vegetarian lavish spread have? Marinated millets, green corn kernel salad, compressed watermelon, and tangy avocado sauce as part of the first course. On the main course is mushrooms, risotto, yogurt sauce, and once again millet cakes on the side, bearing in mind India's focus on giving a push to millets.
For the first course, we will be highlighting the millet. This is the year of the millet, and millet is such a wonderful grain because, first of all, it is climate good because it doesn't need as much water to really cultivate it, and it has a lot of really wonderful health benefits.
Over the past 2 days, Prime Minister Modi has met several business leaders, from Tesla chief Elon Musk, investor Ray Dalio, Micron Technologies chief, amongst others. Hard-selling brand Bharat. But soft power and diplomacy aside, what this visit achieves for India in concrete terms, in a multipolar world and changing geopolitics, will be closely watched this evening when joint bilaterals and a press conference with the heads of both states in presence. In New Delhi, Sumita Karir.
Is there a turn as far as India's foreign policy is concerned? Now, that's a question that we are looking for answers for. And of course, our focus remains on the exact nature of ties that are emerging between India and the US through the state visit that the Indian Prime Minister has embarked on. That focus continues here on ET Now, but time for us to wrap up this edition of India Tonight. We'll be back again tomorrow night at 8 o'clock, so keep your date with us. We'll bring you the big stories. We'll get you the analysis of the news of the day. We put the entire business day in a capsule for you, and we call it India Tonight. I'm Vikram from me and the team. Thanks for joining us. Have a great night.